All right, we are recording, so we're all set. All right, so welcome everybody to this week's Yummy Stock Market Review. My name is Bennett McDowell with TradersCoach.com, and today is the 25th of October. All right, so Gene, before we get going, any comments you want to make?
Well, I just want to welcome everyone, and looks like October is rolling along, and I guess we have Halloween coming up. So very exciting, and of course, we always love when you join us on Fridays at 8 a.m. Pacific on our YouTube channel for Stock Analysis Fridays, and I'll post the link on that. All right, back to you.
All right, thank you. Okay, so let me go through a few administrational items. Welcome everybody. And as we get going here, more and more people will come in. All right, so first thing to go over are the risks involved in trading. Trading's all about a game of probabilities, and it's all about a game of controlling your risk to the best of your possible circumstances. And there's many different types of risks in the market. The one we can control is trade risk. We do that through calculating trade size, placing our stops at certain important areas in the market that have meaning, and that's about basically what you can do besides the most important thing, which is trading with money you can afford to risk, called risk capital. So realize that past performance does not guarantee future performance when we're in the markets, and it really doesn't matter what market you're in. And also too, if we look at any stocks or anything that I talk about are my opinions here based on my analysis. So run those past your financial advisor or money manager, because I don't know your personal situation, they do. So some things maybe that we talk about may be appropriate for you. Some things may not, depending on your personal situation. They know that, and of course I do not. We have a couple books on money management that would be excellent places for you if you need help in that area. My new book, The Art of Trading, is coming right along. It's a great book. It's going to be one of my best books I think I've written to date. First book came out in 2008, and that was the regular Art of Trading book, which focuses on certain aspects of obviously trading the market, but also of the art software. This book's going to delve into the market conditions we're seeing today, the volatility, how to further protect yourself against that, and our new concepts since the last book and new software. All right, so today is October 25th, Wednesday, no FOMC. I'll just start out by saying that. We do have new home sales from realtors I've been talking to. Pretty dismal at this point in terms of not necessarily prices coming down, but activity. There's very, very little activity out there in the real estate market. Some of it, of course, has to do with rising rates, and others situation has to do with the time of year. This usually slows down a little bit. But you know, also too, it's the rates aren't really historically that high. Of course, they're high for anybody that's been living in the last 10 or 15 years, because the rates have been so low back then up until recently, that any raise in the rates look extremely high. Also too, people are in homes with very low mortgage rates now, so they're reluctant to trade those for higher rates. So it's basically creating a low supply, but also a low demand now in the market. So you kind of have a stagnant real estate market. All right, NBA mortgage apps, you can check those out for yourself. Those are low as well. EIA petroleum status report coming out, a bunch of bills. We jumped to Thursday, which is usually the busiest day in the economic calendar. And durable goods orders at 8:30 GDP, trading goods, jobless claims, retail inventories, wholesale inventories, pending home sales, EIA natural gas report, and Fed balance sheet coming out. All right, Friday, October 27th, personal income and outlays, consumer sentiment, and the Baker Hughes weekly rig count. All right, so nothing there is going to throw the markets off. Everybody pretty much is anticipating home sales being kind of flat, so I don't think that's going to do anything, obviously. Looking at charts, for those of you new or visiting here today, we've got a variety of different software tools that focused on price patterns, momentum in the market. We have scanners, and we have risk control software as well. You'll see those on some of the charts too. And the latest chart for the Dow I have up here, this was done on Sunday, and we'll look at the current day here pretty soon. But on October 22nd, 2022, all right, this was Sunday, this is how the market looked. And I want to go over a couple things. So let me just get out of the full screen so I can use my pen here. All right, so notice this area up in here on this chart. This says a 5 daily and a 3 weekly. So this is a daily chart. So we had the 5th wave end up here, and then the market sold off. That also ended the 3rd wave on the higher time frame, and I'll show you that time frame shortly. But that situation was a big deal because then we were due for a change in trend, and we got it. Okay, so we went down here. There's your 5 waves change in trend. And on the long-term chart, that formed a wave. And then we had an ABC on the daily, forming the long-term B wave. And then we had kind of a very interesting C wave. So C wave was a shallow wave instead of a normal C wave. Normally C wave on a ABC zigzag Elliott wave correction hits the target zone. This didn't come even close, and I'll show you this on the next couple charts here, or 2 charts out. And so it formed a bottom, and then we had a move up, which was not surprising, but you didn't get a sell-off. Instead, the move up continued up, took out B wave. Now, when that happens, that's not the usual pattern. And so what we have to be careful about there is recognizing that, and you have 1 or 2 things. You either have the end of the correction here, and this was not a major long-term correction, but only a small wave 4 inside still a wave 3 on the weekly chart. Or it put it into a complex correction, and we're in what we call D wave. And so I'm going with the complex correction sentiment right now because that has the higher probability at this particular point. And at this point, we have not gone above the all-time market high of 36,952.65. So we haven't been above that since basically 2022. Very typical and characteristic of a complex correction where it kind of teeters back and forth. And we had this sideways motion, but this high, if it was usually beginning the new trend up, would have taken out that high, and it did not. Now, the market since has come down, all right, and we're kind of at an inflection point here between this recent bearish low of 31,429 and the high of D wave, which is 35,679.1. So if the market stays in that channel, in between that D wave high and that bearish support, we can expect more of the same. To me, that's not anything the market does inside that range is not really telling or very exciting. If it pops up and takes out D wave, well, then that means we have to watch this all-time high, all right, and see if that gets broken, because if it does, then this will be a permanent C wave on a minor correction. Again, I don't think that's what's going to happen, and that's not my forecast. My forecast is for this maybe to zigzag up here, but eventually head down there like that. So once again, we're forced to basically here kind of sit on our hands and wait until the market does something drastic enough by breaking that support or taking out that wave high, D wave high, for us to get super excited. So a lot of people will ask me, should I sell stocks here? Okay, well, you could lighten up if you want, but the better play would be to sell them if we break below this, because we certainly could get this type of movement for quite some time, and we're not sure, 100% sure, as we never are in the markets, that we may not get a little bit higher price and better places to sell later on. All right, always hard to tell. But that support at 31,429.82 is key. So if we break that, then I think you should lighten up on your stocks, talk to your financial advisor. But during this period here, where the market's kind of remaining in this $33,000 range, talk to your financial advisor and get a game plan. Kind of come up with a way in which you can deal with the market if it breaks below that support. And that may mean lightening up some stocks. All right. If we break below, if we keep going down, all right, and you want to be aggressive with some of your money and go short here by possibly doing maybe some bearish option plays or just simply purchasing some inverse ETFs, okay, that's fine. If you just want to lighten up stocks here and not go short at this point, then if you go below here, maybe that will be the trigger because that's below C wave. That would be the trigger to go short there. All right. So talk to your financial advisor. Think about what's comfortable for you to do. And remember, any sales you make on long-term investments will be subject to capital gains. So you have to take that into account as a tax consequence. All right, so keep that in mind. If we do break below this support level at 28,660.94, then we'll classify that as a confirmation of E wave underway. And E wave should take us down. Now, notice that here too, we got this indicator is red. This is what we call the PTF. It stands for the Precision Trend Filter. And when it's red, basically what that's saying is more lows are coming. And how many more lows? We'll find the lowest price in that red area. And that's saying it should take out that low here. So we're probably not done coming down at this particular point. And I want to look at the next chart because the next chart is the 60-minute chart. And so this had an indication of a little bit clearer Elliott wave pattern, 3, 4, 5, to conclude just below the current low. So that would make sense with the bearish PTF on the other time frame. All right, and this one was close to going red as well. And we'll look at the current chart today and see how that looks as well. All right, so the next chart I'm going to show you is the big chart. That's the weekly long-term chart. And this is where I think prices are going, as this chart here represents every price bar as a full week of trading activity. So there's a lot less noise in this chart, and you can get a better longer-term glimpse of what's going on. So this was basically a 13-year bull market that we think ended in 2022 as a major 3 on this chart as the weekly chart. Then we had the move down A, B, C. Here's our D. And now we have not put a box around this yet because we're not 100% convinced at this point, or not even more than 60% convinced that D is done. All right, because it's very possible we could go up a sliver more before it comes down. So I'm waiting for those support levels to get broken, all right, before, all right, I classify that D wave as over. So if it is over and we're at the beginning, then we should zigzag our way down below C. And if that's the case, the target, the fib target range on this complex long-term correction after a 13-year bullish Elliott wave 3 brings us to a 38.2% of that run, bull run, and a 61.8% low. And that's a regular fib target zone. So this is not something just made up. This is a fib. And that correlates to a price on the down to get into the target zone between 23,273 down to 15,014. Now, our indicator here, the PTF, and it does have a 75% accuracy rate, is indicating that during the next sell-off, we have a 75% chance of taking out this low. All right, so that's kind of interesting. So that puts my target between the COVID low of 18,213 down to the bottom of the fib target zone is 15,000. So that's my forecast. And when will that happen? Probably late 2024, or at least the second half. It's going to depend really on if we get caught going sideways a little further, or if we are indeed now heading down in the beginning of E wave and come up and then keep going down. If that's the case, we can get down there in the latter half of 2024. If it meanders longer, that means it's going to be much later in 2024, like the last quarter, maybe bleeding into 2025. So, you know, that's why if it breaks those support levels, talk to your financial advisor, because this is the possibility of where it could be going. Now, with that said, all right, one of the nice things about being able to get yourself ready for this is you can generate some cash, all right, by lightening up on some of your positions. All right, what I would do is save that cash, because when you get down here, guess what? you're going to have the buy of the lifetime, because after wave 4 is completed on this time frame, then we'll head back up to wave 5, and that'll probably occur, 2025, mid to late 2025, 26, 27, 28, and it will, after 2025, it should be, clear sailing to the upside. But if you can have some money available, some cash available here, then you're in great shape to take advantage of the bargains that will be down there. And believe me, nobody will be wanting to buy then because they won't have any money. It's the same thing as what happened in every other market sell-off. Think back to the dot-com bubble after we settled very low back in there. Again, bargains, and then we had bargains in 2008. Remember Bank of America at $2.85? Those are the kinds of bargains you'll have down in that target range. So keep that in mind, all right? Always nice to have a little cash, and also things are not going to be good. Whatever causes this sell-off, we never know in advance. When we were forecasting the 20 sell-off, the year 20 sell-off, we didn't know if it was going to be a dot-com situation. But usually something comes along that causes the market, after it's bubbled and peaked, becomes very unstable. So any negative news causes the mood to shift quickly. And that's exactly what will probably happen here at some point. And, we have, many things out there that could go wrong. Okay, so keep that in mind. All right, so that's kind of where we're at now, and that's my forecast. So it's kind of a bottom, but you can also make money shorting this down by, going inverse ETF. So that may be a place to protect some of your long-term holdings as well as make money on some short-term plays. All right, any questions on this chart? Any questions? Going once. If you have any, feel free to chime in. I'll move on to the next thing I want to show you, which was the housing market. So I like to talk a little bit about the housing market. We'll look at the NASDAQ in a minute too, but on the housing market here, this is the Case-Shiller Home Price Index versus CPI. CPI measures the Consumer Price Index, so it's probably a core value for inflation, all right? And so that's represented by the black line here. I just updated this, so it's a much better chart than I was showing before because you can actually see the CPI here. All right, so basically what you want in a stable environment is you want these lines like in here and in here to be fairly close. Notice the 2008 bubble, and then it broke, came correlated down here, and then now has been moving up ever since. So at this particular point, you've got a very wide spread, and even wider than it was here in 2008, almost twice as wide. So that's a little disturbing. And if history is any proof of anything, it will work its way back down to the CPI at some point. Okay? And in order to work that way, I think down to a normality area, the market's kind of come down about 40%. Okay? So just kind of keep that in mind. All right? Keep that in mind. So that's kind of what I'm thinking is going to happen. It may correlate and happen with the stocks. It may happen a little after. It may happen before and start bringing the market down too. Hard to say. All right? But that is a sure sign of a bubble, okay, right here in the housing situation. And if you think of the reality of the situation, in California, over 60% of the homes are over $1 million. And in many parts of the country, extremely high for what people are being paid in terms of their jobs, salary. So, if you don't have a lot of money saved up or a very, very high paying job, it's very difficult for you to afford or people to afford a home at these levels. So it's probably cannot be sustained. Now, there's a lot of theories out there. You've got all the corporations buying the real estate, and it'll be nothing but a renter's market at some point. Well, maybe. Okay, that's brand new if that's the case. Could be, but usually, if they're going to buy at these levels, the rents have got to be pretty high too. So I'm wondering, just how much people can afford on a monthly basis, even if companies are buying homes at these high levels, because they're not doing it not to make money. And with the higher interest rates out there, it makes it more difficult for them to turn a profit if they're buying now. So I think the market's due for a collapse. All right, that's my forecast on that. I wish I had better news, but that's kind of the way it's looking. All right, let me just see if there's any questions coming in here. All right, BIL, do you want me to take a look at BIL? All right, I can do that, Jeff, for you. All right, let me come out of here before I go there and just take a look at things like the Dow here at this particular point. So kind of, we've got a red PTF now on the 60, so we're probably going to come down. I'm thinking here, all right, we've been selling off for, quite a while here. I'm thinking here we may see some type of bottom here. Not a major bottom, but a short-term bottom. So I would anticipate a little bit lower, then maybe a rally, and then it'd be interesting to see if we can get above there or not. And if we do, then we'll watch this level and see, but we could get something like that. Now, what I usually like to do, if this keeps going down here, then the new point of inflection will be right about here. So that's kind of where it should come up. And then if it's an E wave and it's going to keep going, then we should see something like that. If it's going to be more of the same, it'll come down here and then do this. All right. And we don't know. All right. We don't have that kind of crystal ball. But I can give you the overall view that I think we're going to make another low probably this week. But then I would expect some bullishness to come back to some degree, but not a lot. Okay. That's kind of the way I'm looking at that. All right. Oh, you're talking about the T-bill. Okay. You could do that. All right. Whatever I would talk to your financial advisor and see what's best for your time in order to be in those, your amount of cash that you have available. Because, that's always dependent upon how long you want to have that money tied up, right? But yeah, something like that is not a bad idea. Speaking of bonds overall, though, let's take a look at TLT. Now, TLT kind of is an interesting animal here because I'm actually wanting to get long on this, and this is the ETF in the bond market, but it's still going down. All right, and it's not bottoming yet. We have a red PTF over here still. All right, so it looks like it's going to work its way a little bit lower. We may get a rebound now since this one turned yellow, but I don't think we have a bottom yet in it. I think we're darn close. We got great bullish divergence here, all right, but we still have a lot of pressure that we've had all the way down here, and it just hasn't gone down yet. This is an area that we were kind of thinking, oh boy, do we have a bottom in here? Well, the PTF was red, right? And it was saying no bottom. So we stayed out. Some people went long, but this tool saved our butt, okay? Because it did make another low. And so we're kind of, now this tool here over here is telling us the long-term situation is not quite done yet. Doesn't mean you couldn't get a rally into the inflection point here. You might get this and then it rolls over because this turned yellow. That could certainly happen, but we won't be going long until this thing is no longer red. All right, so that kind of thing is what we're looking at there. Now, hopefully you got into USO. This was a recommendation. Certainly we've been recommending this a lot on the Moore report. So we're thinking this thing is going to have a high. Oil should get up to around 100 to 123. It's not going to go straight up. It'll zigzag back and forth. It's pulling back a little bit. But this one here, if you got in earlier in this area here, you just keep your stop as low as it is. Take out this high at this point. You can even have your stop here. All right, because that high was taken out. But that looks like a pretty good one. You got a red PTF on the 60-minute. Let me just see if that just turned yellow. Okay, so that's no longer red. So we came basically down, classic inflection point. Let's see if that holds. All right, there it is. And see if we start heading back up. So I like that one. I also like GBTC. This is one I've been saying. I think we have a major bottom in the cryptos. And I think this will do well even if the market's selling off. And you can certainly see that's come to life. We were recommending getting back in when we took out these support levels here. Keep your stop here. Now move it up here. I think you could probably move it there now. but long term, keep it at that pyramid, okay? So I think this is a major bottom. I would expect this to eventually probably get above here at some point, a long-term play. Everything looks pretty bullish on that. And then you've got Coinbase and you've got RIOT. That's some of the others. I want to take a quick look at the real estate ETF, CBT. This is kind of an interesting market in that this is heading down dramatically. And you can certainly see this is a ETF in the housing market, and you can see how the market's not doing good. We still have a red PTF here, so a little bit more pain in there. Watching this here and seeing if this turns red. So we've got yellow here, we got red here. A little further down, we'll see if there's enough force to turn that red. And if it does, that's not going to be a good sign at all for the housing market. So we may be getting closer to a rebound at some point here, okay? A slight rebound, not a major change in trend, I don't think yet, okay? That's kind of where that's at. All right, now let me take a look and see if there's a couple out there you guys want to look at here. All right, let's see. There's some stocks I thought I saw here. Can't find them. Okay. Let's see. Okay, there it is. VXX. Frank, this is for you, right? VXX. All right. So don't forget we have client support today as well. All right. So VXX, okay, inverse, obviously. All right. So this is starting to turn around. It's actually looking pretty good on a variety of levels, which is kind of interesting. So this is not quite green yet, okay, but darn close. Great bullish divergence. So we got yellow, no more red, okay, so it made a low. Whenever you see the indicator go from red to yellow or green to yellow, it worked. When it goes from like here, a green to red, it did not work. So it works 75% of the time, but not 100%. So this looks pretty good, all right? I would, in this first leg up, you got to keep that stop here. Now that we took out this little leg up, I guess you could move it here, but if you can keep it down here, I'd do it. And then you got to decide what kind of long-term play it is for you. But you probably want to keep that stop as low as possible, because I think probably we got a little bit more of a rally coming into the market. And again, I don't think it's going to be that sustainable, but it may cause this to go down, and you don't want to get stopped out on that volatility. Okay. All right. Then we have the famous SQQ, which is a triple inverse on the Qs. Okay. This has got red, and I'm more bullish on the Nasdaq market obviously than the Dow. So I'm reluctant to go long on this one yet because of the red PTF. And if we look at the Nasdaq market, let me go back up here and pull that up. Hopefully I won't get a ghost bar. Sometimes I get a ghost bar. Yeah, it's not filling in that well today. Okay, so yeah, this data is kind of old. Let me just reset this and see if I can get a reset on the historical data there, and see if that helps at all. I might have to go to end of day data, but yeah, it's not going to do much. But anyway, on the Nasdaq, I'm much more bullish on that. You've got your big Nasdaq stocks like Amazon, you've got Google, they're pulling back, but very powerful stocks. And the Nasdaq as a whole has got a green PTF on the daily chart for more highs. So you got it here, but I'm kind of looking at it as this is kind of chart is not really that accurate because it's very spotty. All right, so that's the kind of thing there. And then you got the S&P 500, which is going to mimic the Dow here, okay? And there's that, okay? So we're kind of, in a classic long-term correction. I mean, A, B, C here, or maybe this will be even a broad-based A, B, C. Even that way too is possible. Okay. All right. So that wraps it up for today. Let me just see what everybody's got to say. Hi, Frank. Close to end of bond yield inversal. Yep. All right. Be sure to join us Friday. Ooh, Gene says Friday for Stock Analysis Friday. So if you have stocks you want me to look up, that's what Stock Analysis Friday is all about. So you're more than welcome. That's free. It's just on our YouTube channel. That's all. All right. Dean's saying this event you are watching will be posted and recorded on our YouTube channel. All right. So if you miss it, you can go there, but you need to be a subscriber. Okay. All right. And then that's it. Okay. All right. So good turnout today. Thank you everybody for being here, and watch those support levels, and we'll meet again next week and see how the market is doing. All right, so Gene, I'll turn it back over to you. Thank you, everybody. I'll probably see most of you at the client support webinar in just about 30 minutes, okay? All right, thanks, everybody. Bye-bye.
Great session. Great session. And thank you, everyone, for joining in. Hi there, Alexander. Good to see you. Again, though, as Ben was mentioning, come join us for Stock Analysis Friday, every Friday, on our YouTube channel. When I guess it's on Fridays at 8 a.m. Pacific time. All right, have a great week, and we'll see you next time.